My name is Derek Smith. I'm with Plug-in South LA. We're here at the Urban Tech Connect Conference 2021. Today we have some, two amazing, sort of investors here representing, venture capital on the continent. We have Eric Osiakwan, managing partner at Chanzo Capital out of Accra, Ghana, and Dr. Wilmot Allen, founder of Venture Lift Africa. Welcome both of you to the stage. It's a pleasure to be virtual stage, that is. It's a pleasure to be here with you both virtually again. We had the opportunity to connect earlier this year, and I think the universe sent both of you my way because I've been thinking about early stage investing in Africa over the past 7 years, 8 years, given all of the amazing activity that's happening over there in different regions of the continent. And you both are on the ground. You're involved deeply into the startup ecosystems in where you both are and in other markets respectively. Tell us a little bit about where things are. What does the startup ecosystem look like across different countries in Africa? Where is there the most activity at the present moment? And paint a picture for American investors and early stage founders as to how the ecosystem looks in its current shape and form there.
All right, maybe I'll start and then Wilmo can jump in. So thanks a lot for inviting me, Derek, and it's a pleasure to be on with you and with my good friend, Dr. Allen. And I also want to thank your team for the endless work they've done in making sure that we're on schedule and we can get this done. So now we take a lot of credit and we don't give credit to our teams who do a lot of the hard work. So I always want to, give a shout out to your team for the incredible work they're doing behind the scenes and making sure these happen. So for my side, I got into investing accidentally. So I'm now a trained investor. I wasn't an investment banker. I was a network engineer by training. I was an entrepreneur in my previous life, and I was fairly successful and ventured into investing accidentally, starting as an angel investor, as an advisor to startups. And then they started asking me for money. And then one day, Esther Dyson told me, actually, what you're doing is angel investing. That's what I do for a living. That's what you're doing. You're already doing it. You don't need to start from anywhere. Oh, okay. So that's how I got into investing. And then I realized that I love doing it. I didn't have any more intuition or edge to start my own companies, but I enjoyed the act of working with other people's vision and be part of it. And so in some way, I started expressing my entrepreneurial instinct differently, where I'm not a person leading the company or leading the idea and building it, but somebody else starts, and I love the idea, and I can see into it enough, and I can help by bringing a bit of my experience, my expertise, and also my capital. So that's how I got into it, slow. And then luckily for me, my first company, which is now called Haptel, became extremely successful. Company became broke even the second year, became profitable in the third year. And today the company is valued at about $100 million from Ghana. It's in 3 countries in addition to Ghana. It's a company that is a fintech like e-commerce platform called Haptel. So I kind of figured, okay, if I got the first one right, maybe I'm good at doing it. So maybe I should keep doing it. But to your question now about the state of the industry in Africa, it's exactly the subject of my first op-ed for this year. So I write these op-eds every month on my Harvard blog, courtesy of COVID. So now I have time and I can write a bit of my thoughts, and I love writing. So this year, what I wrote was about the African investment ecosystem maturing to exit. And in that op-ed, I try to sum up the fact that in the last 2 decades, this ecosystem has pretty much, started from nowhere and now got to the point where we're going to see, it's getting to its maturity phase. And by that, we're going to see companies that become unicorns. We're going to see companies that become, decacorns, or companies that become zebras, gazelles, and camels, come up with all these acronyms. But it's essentially is that the startup or innovation ecosystem in Africa is going to gain global attention. And 4 months into it, my last op-ed was, the April op-ed was about unicornization. So today now we have 7 unicorns in Africa, which are basically Jumia, Flutterwave, MTN Mobile Money, Airtel Money, InterSwitch, and which one is the last one? I'm missing out on one. M-Pesa from Safaricom. All right. M-Pesa is probably the most valuable in that, and maybe Wilmot can speak more to that because it's based in Kenya, but it's the mobile money arm for Safaricom in Kenya. And then this month's op-ed, I talked about the second trend, which is mergers and acquisition in the fintech space. That now we begin to see mergers and acquisitions happening. And next month, I'm going to run the third trend that I see, which is what I call big tech in African fintech. And now we begin to see big tech, global big tech companies now looking into Africa, i.e., Twitter, setting up the Africa HQ in Ghana. Google has had their AI center in Ghana. Amazon announced also they're setting up the Africa HQ in South Africa. Already Google is headquartered in Kenya. Microsoft has a big development team and development center in Kenya. Facebook is launched an office in Nigeria. So we begin to see these activities and the signs of a maturing market. And then my final answer to your question is sort of the next sources, the countries that are leading this whole maturation are what I call the King's countries. So it's Kenya, Ivory Coast, Nigeria, Ghana, and South Africa. And now I can add Egypt for North Africa. If you look at North Africa, which sometimes it's not, we don't really pay attention to, we consider it a part of Middle East and North Africa, but North Africa is part of Africa. Egypt has emerged as the country that is attracting a lot of investment, and the ecosystem there has matured. So in summary, that's sort of the way that I would sum up the ecosystem growth as we see it. But I'll let Wilmot chime in.
Thanks, Eric. I think you covered a lot of the ground there. So thank you for that comprehensive overview. Let me just say a few words about how I came to the continent and in terms of my investment track records. I think that impacts how we all see the landscape here. So I first started as an investor in early stage companies, actually in the US, investing in minority women-owned businesses out of Boston, focused on tech. The other touch point was as an investment banker, facilitating investment, if you will, into tech in Silicon Valley. And then on the continent, my work at the IFC was both into funds that invested primarily in SMEs across various sectors, but then also direct investing in companies. And Venture Lift Africa doesn't have its own fund. We facilitate investment, but the other hat I wear is venture partner with a private equity fund that is raising for, and there will probably be a carve out for tech in the early stage. But I think more importantly, all of that is my role as an entrepreneur as a co-founder of a genomics company, because that's given me a very, very different perspective in terms of being on both sides of the table, but primarily in that seat, on the demand side. So what I'll say is this: I think there is a tremendous enabling ecosystem now that's developed in terms of accelerators and incubators across the continent. I think that most of the companies that have become unicorns probably did not go through those systems here. And for various reasons there, they have been able to mobilize the capital. The huge bets so far have been on fintech, giving access to capital, and then also FMCG through e-commerce platforms, et cetera. Where there is, I think, more of an opportunity, but the deficit, and COVID has really exposed this, are the social sectors like education, healthcare. I'm a little biased because that's where both on the entrepreneur side as well as the investor and investment facilitation sides that I focus, but we see that as the social sectors in aggregate as huge opportunities that are underserved. And obviously, if you get the foundation of access to capital, access to energy, and then food, those sorts of things figured out in terms of agricultural investments, then more of the social needs of people become more of the focus. I think the other thing is there's a diversified set of investors now, from impact investors, family offices, the DFIs in terms of early stage, and now like IFC have early stage investment outfits and VC. And so we're seeing an adaptation to the market. Another thing I'd say that is interesting is that there's been an increase in people of African descent being in those decision-making roles. It's taken a while, but I think, most of the international investors have local investment managers that are leading the charge for them. And I think that's a good thing. And noteworthy among that is also the fact that there are more women in terms of both investing, but also will say that about women entrepreneurs, particularly women in tech. And so broad strokes, I think that some of the gaps are figuring out how these companies now can kind of adapt to what's helped US companies, which is more stable middle class. Here it's more of a transient or more of a sort of less stable middle class that most are betting on. And we're going to see that impacted by COVID a lot more. But I think across countries, the regulatory system is now catching up. If you talk about early stage investing in tech, it's been the innovation that kind of has driven the regulatory regimes in terms of how they've structured policies to aid and abet investment, protect data, and also to encourage greater foreign investment into those sectors as well. Over to you, Derek.
Yeah, no, thank you for that. I just want to follow up on a couple of things that you mentioned and that Eric mentioned. So if I heard you correctly, would you say that fintech is one of the sectors that's getting a lot of attention from a venture capital or early stage investment perspective? Is that where a lot of the dollars are flowing? If there was one sector that is a standout, is it fintech?
Yeah, that's correct.
Oh, yes.
Okay,
yeah.
Great. And then which market would you say has attracted the largest share on the continent of venture capital flowing into some of these king markets or other markets across the continent?
Actually, there's a study that came out, I think early this year, that actually said there were 6 main markets. So it was the king's countries: Kenya, Ivory Coast, Nigeria, Ghana, South Africa, and Egypt. So those 6 countries really were the countries that attracted the most. I think out of them, I think Nigeria was first, or South Africa. Either Nigeria or South Africa attracted the most. But the 6 were sort of among the top that attracted investments.
That's great. So look, this is an interesting conversation because we, in the US, one of the problems that we're trying to solve for from a venture capital perspective and an early stage founder perspective is getting more venture dollars into entrepreneurs and founders of color, particularly Black and brown folks. I don't know if you're familiar with the stats here, but less than 3% of all venture capital flows into these communities. And that number has remained pretty constant over the past 6 or 7 years, and so when we look at activity on the continent, Eric, you mentioned, some of the standout startups that have done really, really well and have become unicorn, sort of companies. How many of these startups are founded by people of color in some of these markets? Just out of curiosity, I assume that they are Black people because largely on the continent, that's what, that's the majority of the population there. But, is there, do you guys have some of the same sort of challenges that we have in the US in terms of, getting money and capital into early stage founders? Or is it more of a socioeconomic, sort of like conversation, less race conversation? But in the US, we'd say they're both the same, just two heads on the same coin.
Yes, they are two heads. on the same coin here as well, and probably I'll let Wilmot also chime in on his perspective. But the way I see it is that probably here, the dynamic is a little bit different. Now, if you take just access to early stage capital, the reality is that this ecosystem is still in its early stages, right? And so the way Silicon Valley has matured, and also sort of, the East Coast, is that successful entrepreneurs reinvest, right? That's mostly how early stage, angel investors are built. Now, the reality is that if you take the tech industry, probably we're in the second or third generation, depending on how you look at it. Where the first generation is the mobile operators, the guys who set up mobile businesses, right? The MTNs, the Glows, the Airtel. And predominantly, actually, one of the op-ed that I wrote on my Harvard blog is looking at this phenomenon. A lot of them were Black Africans, which was very, very instrumental. And in that article, I kind of make the point that all of these people were people that came from either government sector or industry or corporate and set up these businesses that became very successful. So these mobile operators became the nexus for the digital economy. So for that, MTN is a South African homegrown business that still remains majority South African owned, and actually has one of the fintechs that is a unicorn, which is the MTN Mobile Money, right? It's predominantly owned by South Africans. The other one was Settle, started by Mo Ibrahim, but he sold it to Zain, and then it got bought by Airtel, Bharti Airtel, and they are now the owners of the company. And they have, we know how Bharti is owned, but they're also trading on the stock market. So they're trading both on the Nigerian Stock Exchange and on the London Stock Exchange. MTN, by the way, also trades on the Johannesburg Stock Exchange. So, smaller investors can own a part of MTN. And actually, I'm a shareholder, one of the small shareholders in MTN, and I bought when they were going public. And I also have shares in MTN in Ghana, and that's, in Ghana, they also trade. And then if you look at the newer, if you, that example, I'll leave that to Wilmot. He can talk about Safaricom, which is also Kenyan owned, started in Kenya, partially owned by the Kenyan government and Vodafone Group. Then you have other companies like Globalcom, owned locally, and then other companies, the more recent fintechs like Flutterwave, started by, Black people, Nigerians, two Nigerians, one of them very good friend of mine who started as founding CEO, and then the co-founder, GB, is now the CEO, and I've gotten to know GB over time. But who was the original CEO, I knew him from his previous startup, which was Andela. So he had started a company called Andela before, and that company was very successful. And then he exited and then started Flutterwave. And then there's been other companies, other startup is Paystack that got bought by Stripe. So it's started by Nigerians, two black Nigerians. So, in the manner of speaking, I think that there's also been sort of foreign founders and white founders also that have started company. For example, Jumia. One of the controversies around Jumia is that it is really an African unicorn because started by Rocket Internet, and the Rocket Internet founders started it with the Black founders, but they are the majority shareholders. So there's been a whole, is a German company, doing business in Africa, or is it an African company in the sense that it's owned by Africans? So that's the other sort of thing about Jumia. But I think that the way this is playing out is going to be predominantly owned by Africans, in my view. And the reason is just, if you look at the sheer number of founders who are local, they may not have access to capital. And obviously, access to capital is a challenge, and we can dive into it some more. So it makes look at maybe foreign founders are getting more capital now. But over time, I believe that you're going to see more local founders because they are in the majority.
Yeah, I'll just add to that. I'm sorry, Derek, were you going to ask a different question, or can I chime in on this?
No,
yeah.
Go for it.
So yeah, let me give, so I'm a political economist by training, so let me give a complementary perspective to that. I think what we see is diversity in the mix, right? So these, the instances and patterns of the profile of owners varies by geography. And a lot of it is still sort of aligned with the economic, social, and political history of these countries, right? Take South Africa, predominantly, and Eric, tell me if you see it differently, but predominantly in tech and early stage investing, a lot of that money goes to foreign founders, right? I shouldn't say foreign founders or white founders in this case, if you're making that kind of
there's
thing.
white founders who live in Cape Town, because sorry, Cape Town is predominantly white, but it's Johannesburg that is predominantly black that is coming out.
Yeah, but in Nigeria, it's predominantly black founders, and that matches sort of the colonialization patterns, settlement patterns, the autonomy, et cetera, that you saw politically, versus particularly Kenya, where the settler patterns of the colonizers were different. And this is still sort of a place where I think you see more of a haven for foreign founders and expats because of that sort of symbiotic culture. And so I do think there's some variation and diversity, but it's tied to or linked to the recent economic and political history of these countries. And I also will say this, I think the other dynamic you see, and you'll see this across the world, it's just sociology playing out as well still. And in the US, Derek, part of the push towards diversity and ownership or investment in Black and brown founders has pushed people to come into reckoning with the profile of the managers and owners of capital, right? The fund managers, diversity there. And so in Africa, that's just still developing. If it's DFIs, then it's probably, not, those are institutions that predominantly are donor-based funds that are funded by predominantly the West. And so you see that play out sometimes in support of foreign founders. But as we're seeing more some emerging locally managed funds and Black funds, or more of a sort of impact impulse towards more diversity, that is beginning to change. So it's a complex issue, but at the same time, it follows historical patterns, both related to history and then human behavior in terms of investors feeling comfortable with people who they can relate to by education, by maybe personality, by background, which is just sociology.
Thanks for that. And I wanted to just throw that question out there because, look, I think if you were in the US right now and you're an investor and you're going out and you're raising money for a fund to invest in early stage startups, or you're a founder and you're trying to secure investment, and you bring up the conversation early stage investing in Africa, one might say, well, we can't even get, investment right in the US for diverse founders and people of color. We can't even get into the game. So why should I care? Or why should I be thinking about early stage investment in Africa right now when we still aren't even securing enough capital here in the US to really sort of grow and scale our businesses? How do you answer that question? And how should we be thinking about early stage investment, with that being sort of like in the background of how we're trying to sort of build and grow sort of successful startups in overlooked communities here in the US?
Wilmot, you want to go first on this one?
Sure. Well, look, a lot of these problems that we're trying to solve are interconnected, right? And so I think there's a demonstration effect that has to be made for Black people across the world. So when you're investing successfully in Black and brown founders in America, many of those, mind you, there's a diversity within the African-American community. Many of those are second and third generation immigrants, right, from Africa, who are successful. The founder of Calendly, for example. So there's a demonstration effect visually and symbolically that impacts how people, I think, will see investing in emerging markets in Africa or emerging markets like Africa or frontier markets. Because remember, in the US, the Black community is still considered a frontier market or an emerging market. That's how we saw it when I was a VC investor. And so, fast forward years later, when I was an investor with IFC, emerging markets on an international level. So I think there is, some interaction based upon this demonstration effect of having people of color, people, Black and brown people, receive capital and build successful businesses. Now, but I think the other part of it is where we're really excited about as far as our mission. We're saying, look, the way to help these businesses grow, a lot of times could be to link them, right? We need successful, fintech companies owned by Africans that may be able to parlay their services into the diaspora communities that need them, and vice versa. Successful entrepreneurs who are Black and brown in the U.S., particularly of African descent, we believe at Venture Lift, there's a place for them and a way for them, an approach for them, and a business case for them to be linked up to African businesses here. I'll give you a good example, Indigenous AI, the genomics company I mentioned, Yusuf Enriquez, Brad Wilson, two Howard grads. We also have Dr. Waller here, who's also a shareholder. Sequencing the African genome, right? Africa has the most genetic diversity of any region, and Black and brown people are the most underserved in terms of diversity in clinical trials. Now, the brilliance of the model is bringing talent, technical talent from the US, combined with local talent on the continent, all around sequencing the African genome, whereby the footprint or the data or the biobank that's created from that is sufficiently large to attract greater customers from pharmas and biotechs, which gives you a larger valuation and a greater opportunity to succeed. So that's why I make that second point about this connection between diaspora firms and African firms, both early stage, working together, in addition to the first point about the demonstration effect in investing in Black people across the world. Eric?
Thank you for that. Eric, why don't you go ahead, and then I'll come back and sort of respond to what you both.
I mean, the way one of the things that we as Ghana did in 2018, 2019 was this year of return that our president, His Excellency Nana Akufo-Addo, championed. And the whole idea was that we wanted to officially, welcome our fellow African-American brothers and sisters that you're welcome back home. And I think that, to Wilma's point, it was symbolic, but I think it was important. Because one of the things that you realize very clearly is that Chinese people are treated different in the US because they can go back to China, or Asians have a root in Asia. So we need to be able to create a route for Africans and African Americans in Africa. So in my view, that was a very, very important move. And now, I mean, I guess you guys have all seen the ripple effect. Stevie Wonder says, I'm going to spend the rest of my life in Ghana. Dave Chappelle says, I'm coming. And I think this is important, and it's going to create that interconnectedness. And so for me, I see this as also, it will manifest in investing. It will manifest in businesses. Wilmot just gave an example of how he is a co-founder with other people in the company, and that is going to create a footprint in Africa, right? And I think this collaboration and this coming together is really what I call the mega trend that is going to create a tipping point, both for African Americans in America and for Africans. Because it's all about markets, right? And it's all about people. And so eventually what it's going to mean is that if you found a company or you built a company in Africa, you have what? 1 billion population, and now the common market in Africa is valued at $1 trillion. But you can also access the US market, right? And if you build a company in the US and you're connected to Africa, you can access the market here, right? So it creates in other words, if we came together, we create a bigger market and we can have more impact. So I see that as sort of the way forward. And the second trend that I talked about, apart from sort of the market, is the returning diaspora. Look, if you look at Asia, the tech revolution that we saw in Asia in the last century was a lot of Asians returning back to Asia. A lot of them lived in the US, built a lot of expertise and experience, built companies. Indians went back to India. The Chinese went back to China and built businesses there. It's happening here now. Now it's in Africa. So that's an inevitable trend. And that trend connects with indigenous African entrepreneurs, who are building companies as well. And then the last trend I talk about is just the fact that Africa has a clean slate, and so moving straight into the digital economy, right? One of the challenges that you clearly have in the US is that you have a lot of legacy, and so is Europe. Africa has zero legacy. So when it comes to 5G, we go straight to 5G, right? I mean, if we see African entrepreneurs building technologies here and using tools that, you know, if they were to use the same tools in the US, they have to think a lot about legacy, but they don't have to think about that here. So in a way, Africa's disadvantage is also our advantage in this century. And for me, that's why I'm excited to be an investor here. Yes, now it's hard. You know, it's not easy because when you're a pioneer, you don't have all the elements. But when I look at this, you know, 20, 30 years from now, it's Africa is the future.
So those are really two interesting responses, and I want to recap them to make sure that we got like the net, right? And I think, Dr. Wilmot, what you're saying is, if you're an early stage founder in the US and you're building and growing and scaling a business, look at the diaspora as a opportunity for your growth, right? With the, you know, with Africa, you know, the continent being a place, and in strategic markets there being opportunities where you can expand. Is that did I hear you? Is that kind of like what the
but we're saying in both directions, right?
Because no, remember, right, for sure.
For African companies, one thing we have to say about African Americans, and of course there are diaspora in Europe and in Latin America, so we don't want to exclude those or not acknowledge those groups as well. But in the US, we know African Americans build brands, right? Ask Nike, ask Hanes.
That's right.
I'm saying you're exactly right, Derek. But I'm saying you're right. But it goes both ways. African companies looking to the US, and diaspora companies, African Americans and American Africans in the US looking to Africa as well. Yeah.
No, that's right. I want to make sure that I have like the American part of it too, because I think that most founders here aren't thinking about early stage investing, or aren't thinking about, you know, markets on the continent as growth opportunities. I think, you know, people want to build global companies, and they want to sort of like expand and achieve, you know, sort of multi-billion-dollar valuations. But I don't know that they think that growth is necessarily going to come from the continent, right? And so
that's the point that I make. My point is that you can create that growth here because that market is here now, right?
Yes, and that's what I'm saying.
Looking at the continent different, right, from that perspective. So it complements what we want. Yeah.
And that's what I want to make sure that like we uncover, because we're unpacked, because I think that's a really important point. And then on the flip side of it, for African entrepreneurs and investors, the net for them, as we look at, you know, sort of the diaspora across, the globe, and with the specific focus on the US, what is that? What is that net for them?
For example, I'll give you a classical example, and I'm sure Wilmot will collaborate this. And one of the things that Wilmot will be trying to do is to say, look, if you want to get into the top deals in the US today as an investor, you probably won't get a chance. But you get a chance just from the dollar size of the deals and the access side of it. But if you take the same capital and you started looking at investing in Africa, probably you'll be at the table for the best deals right now in Africa, because it's a virgin territory and you can build up here. So you may not be able to get into the top deals there, but if you start investing here, you become part of the top deals that eventually emerge here, right? And just from a capital allocation point of view, you know, the money that you have will go a long way here, because the value of deals here are nowhere close to the value of deals there. But the deals here are going to become the value of deals there in the future. So it's two ways. You can say, hey, I'm going to try and fight my way into the deals in Silicon Valley or in LA or in the East Coast, and that's fine. Or you could say, hey, I want to go to Africa. I want to start working with Eric and Wilmot because they're on the ground. They can get me to deals now. I can start co-investing with them and building that relationship and help them build that market and be part of the deals that become the future. And already there's demonstrative effect. I mean, people that invested in Flutterwave and Paystack have made 400% return on those investments in 5 years. The early investors in Paystack in 5 years made 401% return.
Wow. Wow. So let's break it down a little bit. Like, in layman's terms, if you are in the US and you want to get into early stage investing in Africa, um, do you need to be on the ground there? Like, I think the mindset of somebody who has raised a fund or is an angel, or maybe a successful entrepreneur or founder who wants to now invest in other places, Africa being one of them, you know, the geographical barrier might be sort of, the geographic sort of distance might be a barrier to entry. What are the basic steps that you need to sort of take if you really want to seriously explore seeding capital in some of these growth markets?
Yeah, I'll start. I would say, first of all, don't go it alone, right? Go with experienced investors on the continent as a co-investor. That way, from the management of the diligence to management of risk, there's a lot to be said for that. It is important to have a local presence as well, eventually. Maybe not at the beginning, but if you're serious about investing in the continent, you really have to be here because it's more than putting money into a company. It's putting money into a market. And the market has a lot of complexity that you just can't grasp by flying in and flying out. There are now digital platforms like the one we're finishing, where you can be matched up online before you buy that business class ticket to travel to Tanzania. Be matched up, have some diligence done for you, and then have some sense as to how things work in a local ecosystem. And the last thing I'll say is read, study, and learn. There's so many online resources that are not the same thing as being on the ground, but really, really can help you. There's no reason now to repeat the same mistakes from 20 years ago in investing that were learned from early investment in emerging markets, right? From 20 years ago, where there's so much to be learned, so much to be gained, whether that's online reports, lots of news stories, you can get conferences, etc. But if you're sitting in the US, you definitely have resources available, but you never should go it alone. I don't think in any asset class right now, unless you have presence on the ground, you have track record, and you have local market intelligence, and you have an eye towards not a lot of emphasis on investing. But for someone in the US, you got to know how to get your money back too, right? In terms of what are the exit opportunities that are there. Eric mentioned a couple that are, I think, more realistic propositions in terms of mergers and acquisitions, which hasn't been the case for a while. I think the impact of COVID also will point to us seeing more of that.
And to add to that, so we at Chanzo Capital, we have an annual event called Angel Fair Africa, right? And what we do is every year we curate about 10 to 20 entrepreneurs to our entrepreneurial network across the continent. And then we invite about 40 to 50 investors, and then we select a city and we go out there. Right? And this is our way of building the ecosystem, both on the investor side and entrepreneur side, but also fusing the two ecosystems together. And so I always encourage anybody who wants to invest, come to our event, come out, because what we have done there is that we've done a lot of what Wilmot is saying, and we're going to be partnering with Wilmot's platform. So you see a company on the Wilmot's platform, you want to meet them, you come to our event, right? Because I still believe quite strongly that unless you have some way proxy, you should invest in a place that you have not been, because context is important, right? I mean, if you live all your life in the US, the way you see the world, you see to the angle of the US. Now, when you're talking to an entrepreneur in Africa and they're telling you mobile money, you won't get it, because in the US, it's all credit and debit cards. You're like, what are you talking about? You guys don't pay with credit, debit cards, right? But if you go on the continent and you get that context that, oh, actually in Africa, the way people pay is not credit and debit card. Fundamentally, people pay through mobile money. In Africa, the money is on the phone, not on the card, right? So getting those concepts, those constructs, or what I call context, is very important. And if you don't have that, it'll be difficult. You'll be having a conversation with an entrepreneur and you'll be on different wavelengths, because the context is painting to you, you don't have that reality of that context, right? So what our event does is gives you an opportunity to then have that experience, and then once you've, done the experience, and I have a lot of friends who've, come to our event and subsequently invested in Africa. Actually, one of my friends who came to an event twice was a senior executive at DHL in Germany. Came to our event twice, and now he's retired and he's setting up his own fund. And I'm helping him, and he's going to start investing. But basically, use our event as a way to sort of get context, meet entrepreneurs, meet other investors, and that type of stuff. So, the other avenues as well, that you can, leverage, to look into investing in Africa. But my big advice is don't invest on this continent if you don't want to come here, because coming here and experiencing it just gives you a context that is relevant.
Well, look, we could probably talk about so many other things for the next hour and a half. And unfortunately, I know you guys don't have that time and we don't want to keep you here much longer, but hopefully this is a kind of conversation that will be continued and that this isn't the last conversation on how to sort of build presence on the continent and vice versa, right? How to build these ecosystems between, African markets and, communities here in the U.S. Among people of color. Really appreciate you all being here. Really appreciate your time. How can folks get in touch with you if they have any questions or if they want to follow up on some of the points that you've made on this conversation?
Okay, I can go first.
Sure.
So basically, our website is chanzocapital.com, CHANZO capital.com. And there's a link there to, email us. I would say that's the best way, or, if you look me up on LinkedIn, I'm there, I'm online, fairly visible. So you can always hit me or slide into my DM and we can take it up from there.
Great.
Sure. And for me, LinkedIn as well, I would say, check out, the advisory work that we do, startups, SMEs, and corporates in the US and Africa at VLAadvisors.com. And our marketplace MVP is up at VLAfrica.com. But most of our work you can see a broad overview at VLAadvisors.com. My email is CEO@VLAfrica.com.
Really appreciate it and looking forward to staying in touch with you guys. Have a good rest of the week.
All right.
Thank you.
This was great.
Bye.
We're good to talk to you.
Bye.